Boy, can I help you?
Listen up. I'm bringing you the best content to ever exist in the door-to-door industry, from sales, leadership, recruiting, and personal development.
Well, why would I need that?
Because never before have we been able to collaborate with the top experts in their industries, sharing their secrets and techniques on what makes them the best.
Wait, who are you?
I'm your host, Sam Taggart, creator of the D2D Experts and D2D Con. Is there a place we can sit down?
Well, come on in.
Register today for D2D Con, January 10th through 12th. Learn from over 40 amazing speakers, including the real Wolf of Wall Street, Jordan Belfort. Come as a team, learn as a team, leave as a tribe.
All right, I'm Sam Taggart, your host of the Door-to-Door podcast, and I'm here with Zach Bassett, who is a tax professional, not only just normal tax professional accountant, but he is literally specialized in door-to-door tax accounting. I mean, literally, what percent of your clients are door-to-door people?
So at this office, we are specializing in door-to-door. It's 95% of our clients are door-to-door. The other 5% are people that do online sales like LuLaRoe, or they have a product they sell on Amazon.
Like direct sales, basically.
Yeah, direct sales. So it's all the same accounting stuff.
That's awesome. So small business owners that aren't small business owners, but could be small business, you know what I mean? Yeah. It's like this weird,
exactly.
We have such a weird anomaly, I guess you could say, and it's funny, like a lot of people that are maybe watching this outside, I fly to Austin tomorrow, and I consult a bunch of roofing contractors, and literally most of them are like, how do you pay your people $10.99? Is that even legit? Like, am I getting in trouble? I'm like, no, everyone pays $10.99. Yeah. I'm like, you are doing it wrong if you're not. So, but that puts a lot of tax benefit, but a lot of tax strategy. It puts a lot of responsibility on the rep in a sense when it comes to taxes. So we're going to dive into tax planning, how to make sure that you are prepared. You have the 5 tips to how to become successful when it comes to tax and saving money. But before we dive into that, I want to know why accounting?
So accounting was kind of what my dad did. He was a controller, then he was a CFO. So he did, he kind of got to a pretty good career path. So growing up, seeing him do well and
was he the type of dad that like he gave you 10 cents and he's like, all right, we're going to budget this out and like...
Yeah, he did fun stuff like that. We had a paper out when we were like 12, and it was because he was telling us we need to make money if we want to spend it. And then since I was 16 or older, he taught me a lot about finance and retirement planning. So that was really my biggest, passion was doing retirement planning. But the way that I choose to do it is it doesn't come with a lot of income to me. So I wanted to choose a profession that would come with a lot of income to me and then do the finance thing later. So accounting is a way to make a lot of money. So that's what I liked.
Love it. Yeah. So how long have you been working with JB? Kind of like how long JB Accounting, how long they've been around? Tell us their kind of background.
So JB's been going for 10 years, right around 10 years. It was started by my brother Jake. He founded the company and then started growing it. So after about 4 years, I got my degree. I started growing my company, Bassett Tax and Accounting. And after a certain amount of time, we were both going after door-to-door guys because they need it. There's a big need in the door-to-door industry. So Jake called me up. He said, why are we competing? Let's join up. We'll go open an office in Provo. And then while we were here, somebody in Logan they said they wanted to sell their company to Jake. So he said, I'm going to have to drop this on your lap. And so since then, I've been running this office, and I became full partner with him last year.
That's awesome.
Yeah.
And so you're speaking. So guys, if you're listening to this, he's speaking at Door-to-Door Con, one of the main stage keynote speakers, because we found it super important to talk on real estate. We have Steve Maddox, who's the owner of Edge Homes. You on finance and accounting. We have different kind of avenues that we find that really are missing in our space. I mean, I think a lot of people, they make a lot of money, but then they don't know what to do with it. They make a lot of money and then they lose it all because the government's like, swoop.
Yeah.
You know what I mean? So I think that this is a vital piece, and, you know, we're really strategic on how we, you know, plan out the speakers and the topics. So super excited. So if you're listening to this or watching this, you can go get a discount to your D2DCon ticket right now by using JB Accounting in all caps, and it's 25% off. So if you do it right now, you get a discount by, you know, knowing this guy, using this, and watching this. So a little secret, little, you know, hint. So use the code JB Accounting, and then come learn about accounting. So we're going to dive into kind of an overview of it, but I'm excited to see on the main stage, like,
I'm excited.
Dropping fire.
It's going to be fun. I plan on, you know, really giving out my strategy of what I like to do, and yeah, I'll probably be a little nervous at first, but I'll kick butt. I think you'll like it.
I like it. Yeah. No, and I think it's fun to, like, a lot of people are like, oh, we're going to talk about money. I'm like, if you don't talk about money, you're doing something wrong.
Yeah, like, you work that hard to make it, you should do whatever you can to make it work for you.
Exactly.
So that's what I teach my clients to do. That's what my passion is to make as many people as possible save as much money as possible every year, and then create wealth from that. With compounding interest, tax savings can be humongous. So that's kind of what I'll be going over more in depth into.
Cool. So let's dive into these 5 tips on making sure that we do it right. You know what I mean? Yeah. So tip number 1, what is that?
Tip number 1 would be to find an accountant. If you're on a 1099, especially. Because if you're on a 1099, you are now at a disadvantage if you don't have the right accounting, because you're going to have to pay self-employment tax of 15.3% on all of the profit on that 1099. And if you don't know how to properly take expenses, that means you're probably going to pay it on all of the income that you had on that 1099.
Where if you were a W-2, what's your tax?
Just half that.
Half that.
Yeah. So that's the big difference is if you have an accountant, they can let you know exactly how to be taxed. So you don't want to just do a Schedule C tax return. You might need a S corporation, or maybe you need to do a partnership. So if you think it's too expensive to go to an accountant, it's kind of a crazy thought, actually. It really is, because an accountant helping you do things the right way will save you tens of thousands of dollars if you're making $200,000 or more. If you're under 50, it's going to save you $1,000 or $2,000. I mean, it's crazy how much that it really does save you.
Yeah, and I find that it's really common for people to be like, I don't know if I want to spend $5,000, $7,000, $8,000, whatever it is, to file my taxes through an accountant. I'll just go do it myself on TurboTax.
Yeah.
But I think what they're failing to follow is that principle from The Richest Man in Babylon, where it's like, are you going to give your money to the brickmaker, or are you going to give it to the guy that knows how to deal with your money? Like, you know, you studied how many years to make sure that you're saving money?
A long time.
Yeah, and it's like, when I look at an IRS letter in the mail, I go, this is a different language. I don't want to read it. Yeah. Run. You know what I mean? I'm like, let's just ignore these.
Exactly.
And that's what most people do. Yeah. I mean, we look at all these different schedule this and section this and line item this, and you're just like, I don't know.
You'll go, I had X amount of gas, or I had rent. Can I take it? You know, I had this or I had that. That's what an accountant is going to do for you, is to make sure that every one of those questions are answered and it's all reported correctly, so you don't get IRS letters. But if any of my clients get an IRS letter, all they do is take a picture of it, text it over to me, and then I send them a text right back. Oh, that's because you paid your quarterly late, or that's because of this or that. We take care of it. We help with problems with the IRS no matter what. We'll help you through an audit. If it's our fault, we pay for late fees, penalties. If it's your fault, then we'll help you out and charge you for it. But we do it all.
And I bet you some of these people listening to this are probably like, what's a quarterly? You know what I mean? That's what's mind-blowing. Yeah. It's like, okay, let me tell you a story. This is funny. So I sell 2008, right after high school. I then go on my mission. I get a call from my dad like a year and a half into my mission. Hey, the IRS is after you. He's like, you didn't pay your taxes. And I go, what do you mean taxes?
Yeah. No way.
Not just,
So you didn't even know.
I didn't even know.
Yeah.
He's like, you made money. You have to pay taxes. And I
Yeah.
was like, oh, I just thought, I'm like, oh, I've never done that before. You know what I mean? And literally it was an ordeal trying to, from Argentina, pay those taxes. You know what I mean? And try to figure out, and I'm sure I paid way too much because it was literally like, here's your bill, here's what you made.
Yeah.
And I paid way more than I needed to had I just said, here's an account, here's what I made, here's my expenses.
Mm-hmm.
You know what I mean? Huge. So I think that there's a principle there, and a lot of people need to understand is just find a good guy. So if you need somebody, you got, Zach here. I'm sure that, if you're out of state, do you guys take out of state people too?
We take clients in every state of the U.S. Certain states will come with a little bit of a higher annual fee just because there's a lot more reporting, in New York, or depends on what you need, but the pricing will change a little bit depending on state.
Cool. So let's go to step number 2. Tip number 2 would be?
Tip number 2 would be expense tracking. So before you have an accountant doing your bookkeeping, you need to actually track those expenses, or else how are you supposed to write them off, right? So one thing I really like to use is now, I've gone through many different apps, but the new one is the QuickBooks Self-Employed app.
Is that better than like a Mint or a...
Yeah, I think so.
Okay.
So QuickBooks just does things on another level for bookkeeping. So they're going to allow you to track all your mileage on QuickBooks automatically. They'll allow you to take pictures of receipts, and it'll log it into each little area.
Oh, wow.
So yeah, you can start tracking, and it'll tell you all your totals, just like Mint. It's a lot like Mint, but I think has a few more features, including, you can send it to your accountant at the end of the year. So December 31st is over. You just put in your accountant's email, send it over, and then I'd have it, or whoever would have it, and they could use that for.
It's all already categorized.
Yeah.
A lot of those apps, what I like about it is they kind of make an assumption. They're like, this one tend to be entertainment.
Yeah.
You tend to put it in this bucket, so we'll start putting it in that bucket. And it's more of a quicker, intuitive way to kind of track your expenses, which I like.
Yep, exactly.
So if you didn't track your expenses, let's say you're just swipe, I got money in the account, what ends up happening kind of the end of the year? What are the repercussions of that?
So, if you find if you do your own taxes, then it's going to be, you're going to have to guess on everything, and you're not even going to really know. You'll be really uneasy about what you're taking if you take anything, and a lot of times it's going to mean that you underestimate your expenses because you don't want to overestimate, because that can be fraudulent with the IRS. So you might not get as good at deductions as you should have. And then let's say you do take the expenses and you get a you get an IRS audit, and then they find out you don't have any backup for it. Like that could be also considered something that you'd get in trouble for.
Yeah.
Now, if you didn't track it all, it doesn't mean we're not going to take the expenses. We're still going to take them, but we want you to go through through your bank statements and really, buckle down and come up with a good number for each one of our categories. You can write off uniform expenses for stuff you buy for the summer, shoes and pants that you ruin while you're out there. You can take rent during the summer. You can take utilities during the summer. The per diem for meals. You can take...
Tell us what that is, because I think a lot of people miss that one.
Okay, so per diem, a lot of people also mistakenly take the trucker's per diem, which is much higher. It includes lodging. You cannot take the lodging per diem if you're a door-to-door guy. It's only for the truck driving industry. So let's say you went to LA and you did your sales. Instead of taking actual expenses for meals each time you go out to eat for lunch and dinner, you're going to take the per diem or the per day rate. It's an IRS safeguard. So in LA, you take $74 a day.
Which most sales guys aren't spending $74 a day.
Yeah.
So it ends up being a greater tax savings by understanding what that is versus I'm going to write off all my meals.
Yeah. Yeah, it's much bigger. It is limited to 50%, so you have to cut that in half. But just knowing each one of those little things are what's going to save you money. Another one where people lose out on is mileage. They take gas. They take gas and repairs on their vehicle, which might be $1,000 by the end of the year if you're lucky. And then so they're missing out on this big, huge deduction, which is mileage. So if you drive 20,000 miles during that time, that's 54.5 cents per mile. So you've got over a $10,000 deduction.
It's huge.
And
especially we drive a ton. I mean, going to area, dropping people off, even recruiting meetings. I mean, people drive up to Idaho or they drive wherever, you know.
Exactly. Driving to see your accountant, driving to your business bank.
You found that in that QuickBooks app, it somehow, does it do geo-tracking? It's like, this is a business trip.
Yeah, so what it does is it'll track just when you're in there, whenever you drive, so it'll track personal and business, and you have to, log in and you'll swipe left.
Oh, that's
right.
easy though. So it knows when you're driving, it knows when you're not, and then you're like, obviously this was a trip, this was personal, that's super nice. Because I'll be honest, I'm always kind of like, probably like 15,000. Yeah. I'm just gonna guess.
No, a lot of people do that too, but at some point you really do need to track. As your income goes up and you have multiple businesses, your odds of an audit go up a lot.
Yeah.
And mileage is one of the things that's one of the for sure things that they're gonna check if they're checking expenses.
So how did you come with that number?
Yeah. If you take 15,000 miles though, you're not gonna get audited. I mean, most of the time, it's when someone says they have 45 or 55,000 miles or something silly like that. Then the IRS looks at that and they'll go, well, we want to see some backup before we give them that deduction.
That makes sense.
So
track your expenses. Tip number 3.
So tip number 3 is to get the best tax outcome. You need to get the best tax outcome possible if you are a door-to-door salesman or anyone that is self-employed. That goes along with finding the accountant. If you don't have the right accountant, you're not going to get the best tax outcome. I fix issues for at least a couple clients a day that have been with the wrong accounting firm, because they'll say, oh, I've been with this firm, they said they specialize in this or that, and I'll look at their stuff and see that they did a Schedule C tax return, which means they paid in way more self-employment tax than they should have. They should have had a S corporation, which is what we do for anyone profiting over $6,700. So if you profited over $6,700 on a Schedule C on your tax return in the last 2 years, send me that tax return.
We'll get you. We'll backdate some of that,
and I'll backdate an S corporation for you. Save you a whole bunch of money. Get it back with next to zero audit risk, because all we're changing is the entity. We're not changing expenses.
What the expenses were.
Yeah, we're just changing the entity.
So give us an example. I think a lot of people, maybe this is over your head. So if you're watching this and you have questions, make sure to comment them right now. But an example of this, I made 70 grand.
Yeah.
Let's do 100. Easy math. I make 100 grand. I do a Schedule C.
Mm-hmm.
I switch it to an S corp. I pay myself a reasonable wage.
Yeah.
How much difference in taxes could I go and backdate that?
Yeah, so if it's showing $100K in profit on your Schedule C, that means you paid in $15,600 in self-employment tax. If we were to backdate an S corporation, you'd only pay it on $20,000, so you'd have $3,600 or so.
So that's literally a $12,000. People are just sitting there on the table.
Yeah, $12,000. We do backdates almost every day. So look over your past tax returns, or just send them to me. If you're unsure, just email them over to me and I'll take a look. If I don't see anything that I can save you on, I'll let you know. But most of the time, I'd say 70% of the time, I find something I can save them money on and add no risk.
So that's what's crazy. So if you're watching this or listening to this, and you ask yourself, wow, I listened to the Doro podcast. I got this advice to say, oh, did I file this wrong? Yeah. Because my accountant doesn't understand door to door. They don't understand what we do, right? That's probably the main comment. My uncle's an accountant. Mm-hmm. Well, he does the same tax for everybody, so then he just puts you into this cookie cutter approach that he takes. Am I right?
Exactly.
And then what happens is now you go backdate this, and you were to go get $12,000 in like a month. What would that do for you? You know what I mean? That's what I'm saying. And then we did that 2 years. That's $20,000 that you guys gave to the government. They're sitting there with your money, and you didn't need to pay them that. Exactly. And I think that's the difference between people that are listening and will take this to heart. You guys will do something about that, because I had that happen. I literally had a $15,000 check when I started paying attention, and I'm like, oh, thanks, accountant. You know what I mean? I'm just like, thank you. I would have never done that or even looked.
Yep.
Crazy.
So it's very worth it. Right?
Yeah, worth
what
it.
you're saying. It's very worth it. Sometimes it can be savings in the, it's just crazy how much you can save. It's 20, 30, 40,000 on some people's tax returns because of a couple things that they missed. It's because we specialize. So if you're self-employed, really just send it over. I will find stuff or I won't, but it's worth a look. We're talking a lot of money that you can save.
And so then let's talk a little bit more on that strategy, because this tip, it's more how to make sure that you strategize the right way.
Yep.
And I think this is where a lot of people go wrong. And I almost did this, but luckily I had good advice. I like real estate.
Yeah.
So I'm going to go get a fourplex. And a lot of us that make a lot of money, we're like, great, I want to make X amount so I can go invest into real estate. But I obviously want to avoid as much as I can paying the government.
Yeah.
So if my strategy is like, I'm going to buy $1 million in real estate next year, and I show $30,000 of my own reasonable salary, I go to mortgage dude, what happens?
He's not going to give you the loan. So you need to make sure that you let your accountant know exactly what it is that your goals are. So when we do our annual tax planning meeting with clients, it'll be 30 minutes or an hour, however long it takes. But one of the first things I want to know is this a rental guy or is this a everything else guy? So I'll teach everyone to try and get into rentals at some point, but I do have my specific formula of the fastest way to basically grow your wealth in conjunction with tax planning. That's what I'll go over with in door-to-door con. But I go over that with each client. I go over it over and over, and let them know, do this in this order. You'll build fastest, and you just need to make sure that you know that your accountant knows what it is that you want to do, or else I might expense off every single thing and tell you to do, this retirement plan and that retirement plan, and all of a sudden you have no income left on your tax return.
Exactly.
The bank's not going to like it. So.
And that's what a lot of people do. Like I put myself in a bind. I did overfunded an insurance, 401k.
Yeah.
I was doing like every tax strategy there was because I made such good income.
Yeah.
And then I was like, oh, freak. But now I don't get to see that money until I'm 60.
Yeah.
And I'm like, darn it. And I'll be grateful when I'm 60.
Exactly.
But at the same time, there's like aspects of it. It's like, what's the strategy? What's your short term, your long term, your middle range game?
Yeah.
And I think a lot of times having your financial planner / accountant / your insurance / your real estate advisors, all of them all on the same page.
Yeah.
Because if one of them's like pushing down a product down your throat, he's like, you need to get X insurance like that. What happened to me?
Yeah.
I'm like,
that's too bad.
Yeah, you know what I mean? Now I'm stuck.
Yeah.
Like it's just kind of like, either I lose it all or I kind of just whatever.
Yeah,
just
run with it.
Run with it and it sucks and I regret it. You know what I mean? So I think that strategizing with people you trust would be a super important piece to that as well.
Yeah, exactly. We try to do it all in conjunction. We've got the financial company, we've got the rental property company, Deluxe is the rental company, and then we've got Fortress Financial. So we can help you basically get all your ducks in a row in one place instead of, let me talk to my financial guy, let me talk to the guy that's managing my properties and get my some of my bookkeeping. It's all in-house. Mm-hmm. It can all be in one place.
Okay, so tip number 4. Before you go into that, hold on. I gotta fix the camera real quick. It shuts out at 30 minutes.
Okay.
Quick pause, intermission. Go buy JB accounting. It's this all alike, and it's gonna throw us off. That's better. Okay, so tip number 4.
Okay, tip number 4 is deadlines. You want to make sure that you're hitting all your deadlines. A lot of people will set up a S corporation with the company and start getting quarterly fees from that accounting company, and then they'll decide, I don't need them to do this. It's easy. I'm just going to do my stuff on my own. It almost always turns out bad because you can't just not do quarterly reports. So people think, I don't have to do those. You actually do. Even if you don't owe tax, you have to file each quarter.
I think I have 4 of those letters in my mail right now, sitting there. And I'm
penalty letters?
Oh, yeah. you owe X amount in taxes. I was like, I didn't even make any money with that business.
Yeah, if you have penalties, send them over to me because I can do my best to get those abated.
Okay.
So you get a one-time abatement with each company that you have
really?
on your biggest late fee or
one
penalty.
of mine's like $2,000. I'm like, the business hasn't even made
Yeah.
$2,000, and I'm like,
I can fix that, no problem.
Good.
Yeah, and then I can fix them after that as well, possibly. But after that, it's 50-50 whether they take it.
Even quarterlies.
Yeah.
Okay, tip: the business made no money.
Yeah.
I still need to file the stinking letters or whatever.
If you're set up as an LLCS corporation, then you've got to file the quarterly reports.
They want to know that you made no money.
Yeah, they need to know. That way that they're happy with you not paying in any taxes, right?
Yeah.
If you don't pay them in, you get $200 fee per month.
Crazy.
So it's a big
Mine's
deal.
like $2,000 right now, guys.
Yeah, and it happens all the time. And after your one-time abatement, you're SOL. So other things you don't want to be late on are so if you get a letter in the mail, you do not want to ignore it. They're very important. They will put a levy on your bank account. They will seize your funds. I've had many clients that it's happened to because they just didn't pay and never sent in any letter to me or never sent in a payment to the IRS. So after about a year, the IRS will just take it from you. You've got to make your payment as soon as possible, but at least within a year of having it be late, or they're going to just take your property from you.
Oh, I thought of the accounting joke.
Oh, did you?
Yes.
Nice.
So think of the IRS.
Yeah.
They always get theirs. The IRS. Got it. Now, just knee slapper. It came in right as I needed it. Perfect. But that's the point. It's like they will get theirs.
Yeah.
Always.
Yep, they will get theirs no matter what. Yeah. What do they say? There's 3 certainties.
Yeah.
Or 2 certainties, death and taxes.
Death and taxes.
Yeah.
That's what I say. Like,
yeah.
So you get a letter. A lot of times this is mumbo jumbo to us. Is there ways or resources? Like I call the IRS and I'm like, what is this? 5 hours later, oh, we got a person on the phone. Like, is there other ways to go about like knowing what the heck these even letters mean?
Yeah, I mean, you can do it the way I did it, which is just, I Googled it first and found out, and you can actually put in it'll say notice, and it'll give you like a CP 1000 or whatever. You can type into Google CP 1000, and it's going to pull up, oh, this is for being late on a quarterly. And normally it does state it in the actual lettering.
You have to read it?
Yeah, the subject matter.
Okay.
But you have to read it, and it has some complex wording, so it'll say things like 940, 941, and you might not know what that means.
It always throws me off. I'm like, man, these number talk.
Yeah.
Let's be honest.
Yeah, exactly. That's why you do what you do, and I do what I do.
So the other deadlines, I mean, I think that there's important deadlines when it comes to, I want to save money on taxes. Like some advice that I've always gotten was prepay your state tax. It's got to be done by the end of the year. If somebody wants to save money on, like for a write-off with 401k, when is that,
Yeah. So definitely on the 401k, you can prepay your state tax to save on tax this year, or you can just pay it on time and save on tax next year. Okay. And if your income is going up, then it's going to be more valuable to you in the following year.
Okay.
If your income's going down, then you want to prepay. So that's definitely good advice. That's what you do in that tax planning meeting, is figure out what things need to be done, what direction you're heading. Because sometimes the summer salesman might make $200K this year, but then the next year they're not doing sales and going to take a year off. So we might want to make sure everything's included in this year and as little as possible next year.
That makes sense.
Right? So, but the retirement accounts, you have to make sure that they're set up by the end of the year. If it's a solo 401k, that has to be by December 31st. And if it's a IRA, it's by April 15th. It needs to be set up and funded. But you can actually fund the solo all the way until the extension deadline if you extend your taxes to October 15th or September 15th.
So talk to me a little bit. Side note, I'm going to run on this tangent. Hope you guys don't mind. Solo IRA, Roth IRA, IRA, whatever's. Like a lot of people talk all that.
Yeah.
What's like, at what point can I not do a Roth versus?
So I believe the phase out, if you're single, it starts at like 115,000. You can't, after that, you're going to phase out how much you can do into a Roth IRA. and then
Just to tell them why a Roth IRA would be awesome.
Roth IRAs are awesome because it's basically going to grow if you put 5,500 in, it's going to grow all the way until you retire. So if you're 20 and you put 5,500 in, you might have 600,000 when you retire at 65 when you have to pull money out. And if it's a Roth, you don't have to pay any tax on that money.
Yeah, not going in nor out, right?
Well, going in, yes, you
going
do pay
in,
tax.
but not out.
But yeah, think if you're an 18-year-old and you're going to school and you make 10 grand and doing summer sales, that 5,500 is going to grow to be that, and you're not going to be taxed on it. And you're also not going to pay tax on it this year because the standard deduction is $12,000. So
Okay.
you're automatically at a loss for taxes.
That's cool.
So now you got no tax and no tax.
That's beautiful.
Yeah.
Okay, so let's move on to any other thing as far as deadlines or advice to make sure that they're hitting.
Just make sure that you have a good accountant that helps you be aware of the deadlines. If you're unsure of maybe what they are and you do have an accountant, ask them for some help or switch over to me because they aren't doing a good job. And because we send out a calendar to you when we first set you up with all the dates, our pricing, and we ask you to put it in your calendar so you know when something's happening. But on top of that, we're going to send out reminders before each thing's due. So in a couple of days, we send out the third quarter report text that says, make sure you check your email. Third quarter is due. If you don't have it in the mail postmarked by the 31st, it's late. There's a late payment penalty, a late filing penalty, and interest.
Yeah, and just being on top of it, think how much money people save on that. You know
it's
what I mean?
huge.
It's
Yeah.
huge. It's like if every time I had to spend an extra $25 for a late fee and an extra X for interest, and that all adds up.
Yeah, it really does. So you just want to make sure you're really aware of those dates. And it's not just filing the report, it's paying the taxes at that time.
Yeah.
Oh, this is another thing. A lot of people mess this up. So they think that when they extend their federal and state taxes, that means they don't have to pay their taxes until they file by September 15th or October 15th. Well, that's not the case. If you extend your taxes, it just extends the time to file, so you won't get the late filing penalty. But your taxes were due on April 15th, so you have to pay an estimated amount. So your accountant should tell you, hey, your estimated amount is this amount, and you can pay it.
So if you don't pay that, do you accrue interest after that?
Yeah, you accrue interest and then you get the late payment penalty as well, which the late payment penalty is going to be the worst part because the interest is very nominal. Some people really hate getting fees from the IRS. Some people are like me and they purposely don't prepay their taxes and they don't estimate and pay it on April 15th. I will wait and pay the late fees and penalties because I would rather have my money invested in a brokerage account making, 7-8% safe, like a real safe account. I make 7-8%, and then I pay in the fees that equal to be maybe 2%.
Interesting.
So, yeah.
But you gotta be smart and have that as part of your plan.
Yeah, exactly.
Because a lot of people don't have that money sitting in a 7-8%.
Yeah.
And it's like you would have just been better off paying it.
That's very true. That's why you want somebody that's got the whole circle going on.
Exactly.
Yeah.
Okay, so let's move on to tip number 5.
Okay, tip number 5, review your accountant's work. So I know that sounds counterintuitive. You're like, well, why do I hire him if I have to review it? What I mean by that is get a second opinion. If you are unsure how well they're doing, they might be able to save you more. Send it over. I'll let you know what I would have got with the exact same numbers. I'll say, we could have done an S Corp, or we could have done this, or we could have done that. You didn't take this credit. You didn't max this out. And then I'll send you back basically a quote of what it would be to help you do it and how much it would save you. But the main reason why is to make sure they're not doing anything illegal on your part, because they're, especially in door-to-door.
Yeah.
A lot of people are setting up shop saying, I specialize in door-to-door, I'll do it for this price. And someone making $150 goes over there and they're like, I'm getting a refund of $1,000? This is insane after the accountant gets done. You're the best in the world. Well, if you took a look at that tax return, even if you don't know taxes well, you could look at it and see, they wrote off a $60,000 truck and they took 55,000 miles on a different vehicle. but all I had was the one Honda Accord. Like, what truck is this?
Yeah.
But guess what? You signed the tax return. Not your accountant signs it too, but when you sign, you are agreeing to everything on the return. So you've got to make sure it's being done right, because in that case, that would be a case of fraud, tax fraud. And unless you could prove it, it's on you. You signed it saying it was true.
So true.
Yeah.
Which I actually ran into that. I haven't been audited, so don't audit me for watching this. But no, but for real though, like, it was just I didn't have second eyes, and then when I switched accountants, I ended up having second eyes, and I go, this is all wrong.
Yeah.
And they're like, if you get audited the last 4 years, you're screwed.
Yeah.
And I was like, oh. Because I am aggressive. I like to kind of play it on, like, come on, let's figure out how to say more.
Exactly.
Like, but I think that, my uncle actually gave an interesting advice. He runs a big law firm here, and he's like, the taxes are for taxes. He's like, we benefit from taxes.
Exactly.
We have roads, we have, school systems, we have firemen, we have policemen. He's like, so just pay it. Like, that's your contribution to the society. Like, the fact that you make great money, good job. You get to pay in taxes a little bit more. So I think a lot of times our goal is to say, like, how do we just avoid everything? Yeah. My uncle had a good shift for me, and it was just like, it's like, dude, I pay a ton of taxes. I'm not aggressive. I'm not so conservative where I don't take any write-off. But at the same time, it's really interesting. He's just like, that's why we have taxes.
Exactly. Yeah. There's a reason for it. It's not bad to pay them in. Of course, we're going to try and do whatever we can to lower them. But there's a certain point when you just want to stop. And that's when you get to the point of you're maxing out solo 401k, IRA, you're doing HSA accounts, 529 plans, you did a couple of rental properties, and then you've taken all of your actual expenses. That's when you stop. You stop then and you're good. You might even take a little less than that if you're trying to get more rental properties the next year, because we want to make that AGI, adjusted gross income, look good for the loan officers. Otherwise, they're not giving you as many loans as you would want in that year.
100%.
Yeah.
Okay, so to kind of wrap all this up, I've got a last couple questions.
Okay.
One, what's the craziest tax story you've seen? Has there been any wild audit or
I just had one really crazy. But if I told it, he was just here 2 days ago.
Can you say an honor?
Or a couple days ago. He would know, but let me tell you one other cool one. So one of my clients who does not care if I mention this story, he's a big dog over at Vantage. His name's David Turner. He helped us grow in the early stages after what we did for him, because his dad works for a Big Four tax firm. I believe it was Deloitte. And I told him, look, I think I can save you money on your taxes. He's like, man, my dad works for Deloitte. I'm good.
Yeah.
And I was like, please, man, just let me take a look. I promise. I was real hungry. And I said, I don't know what I promised him. Maybe I'll give you this if you just let me take a look at it. And he showed me it, because it was as I expected. I thought maybe his dad was so busy, he just did a quick Schedule C and, here, pay your taxes. And that was the case, because he needed an LLCS corporation for taxes, and I saved him. Correct me if I'm wrong, David, if you watch this, but it was $27,000 that he saved, and he tells everybody, so I can tell people. But that was the coolest story for us, and one that just helped us really grow.
He's like, it was my own dad that is a Big Four. You know what I mean? Yeah. That's cool. No, and I think that happens more often than we think, and that's what we talked about in principle number 1. Yeah. So if you were to talk financial planning more so than like there's 2 ways to make money: avoid paying the government and save, or make more revenue. So any advice when it comes to the revenue generation aspect? Like, obviously you're dealing with money a lot. You're probably pointing people in the right directions when it comes to investments. Any big wins or directions or advice you'd give on that?
Yeah, so I want you to put all of your money into Apple. No, okay. No, so the main advice would be that you do have a good financial advisor. That's going to be a big deal. And then because you want to be with the right actual firm as well, because certain firms will make you have a minimum amount before you can invest in the type of investments that you should be in, which are, you should be in exchange traded funds, ETFs, which have hundreds or thousands of stocks inside of them. So when you buy a piece of this ETF, you're getting a piece of all of those companies inside of it. So you're diversifying your risk. That's going to be your main thing that you want to do. My number one advice would be to diversify your risk. That's what a good financial advisor will do. Number two would be to lower your fees. So on mutual funds, there's front-loaded fees, the back-loaded fees, there's annual loads. So that means you're going to have fees at the beginning when you first put the money in, at the very end, and every year. So it can end up cutting your 12% return down to like 7 or 8 between now and retirement, which is enormous. That means your money will double, like, 3 times less than it would have if you got to keep 11% of those.
So how do you avoid the fees?
So you got to make sure you're with the right firm. So like with Fortress Financial, the firm that I'm part owner of with Jordan Monk and my brother Jake Bassett, we don't do any front or back loaded mutual funds. Those mutual funds are set up to get kickbacks to your financial advisor and that company. So it's a predatory thing, just like universal life insurance is.
Yep.
So we don't sell universal life insurance unless somebody is adamant that that is what they want. And we will get them the best price because we can go with any company because we're independent. So we don't have to sell, life insurance through State Farm or this place or that place. We can pick and choose from wherever we want. So that's how we get your fees lower. We make sure you're in ETFs, and even if you have $1,000 that you put in.
That's interesting.
We don't require you to have $250,000. And the reason why I said I didn't start a financial firm first was because there's just very little money in it for me with the way that I do it for people.
Yeah, because you don't want to sit there and sell them the highest commission thing because it doesn't necessarily, and that's what you find. And this is great advice because it's so enticing to talk to a financial guru that says, buy this product, this mutual fund or this life insurance. That's because they make the most money on that product.
Money off.
I've been a victim of that. And it's like, and every time I'm like, well, I want to get into real estate. They're like, no, that's not smart. I'm like, what do you mean it's not smart? You just don't, you want my money in your product. You don't make money when I go real estate. You know what I mean? And you're like, do you have my best interest or are you looking out for yours? And I think that's like an important principle that a lot of people forget, that it's like, you're talking to salespeople. Banks, they want to sell you money. Investors, they want to sell you money. You know what I mean? Yeah. So.
And I hope that my current clients, know that basically, I think they know that, like, hey, he really is doing things the right way, because I was preaching the exact same thing before we started the financial firm. The exact same step of things I do to grow wealth, it's the exact same now. But I'm just going to save those people, because they'd go out and I'd say, do this, this, and this. And then they'd go to Northwestern Mutual and get sold a universal life insurance policy that's going to really, really underperform like crazy compared to a IRA would on average, right?
100%.
So I just got sick of it. I'm like, this is getting, it's really crazy. Everyone was doing them. And then they weren't putting money in the right accounts, or they were all going into mutual funds. And so I just said, okay, it's time. Let's get it going. I found Jordan Monk, one of the most morally responsible people I've ever met, and somebody that invests right alongside with you in those accounts. His money's in the exact same spot, and so is mine, all in the exact same funds. So you're kind of getting that.
That's awesome.
Yeah, we're selling you what we're doing ourselves.
That is super cool. Yeah. Cool. Well, let's wrap up. I always ask, dude, and honestly, I appreciate your time. Super excited to obviously see you at DoorCon.
I appreciate your time.
And this has been insightful. So share this if you know anybody, or like this. If you're like, hey, my rep needs to hear this. My manager needs to hear this. If you know people that are like, wait a minute, they're idiots with money and they've never taught me this, or we've never had this conversation, whether it's your dad from Deloitte or, I don't care who it is. They need to, people need to be educated on this. So make sure to share this, give Zach some love.
Awesome.
But yeah, any other advice for door guys that you want to give, or?
Just reach out, it's free. Consultation's free. If you go to your dad or if you go to your mom, do you want your parents to handle your stuff your whole life? I think it's good to step out on your own to do financial and accounting. I think it's a big deal. And you know what? They probably don't specialize in door-to-door, even if they do your taxes. If they work at H&R Block or whatever it might be, there's a huge difference between specializing and doing taxes.
100%. Cool. Well, thanks so much for your time, man.
Thank you.
This has been awesome.
Yeah, it's awesome.
All right, people.